Hey, Think Realty, thanks so much for joining us on the podcast today. My name is Eddie Wilson, the founder of Think Realty. Founded in 2013 as a real estate investor, third generation. And so what I wanted to do is bring all the content and information that I learned sitting around the table with my grandfather, my father, to the general marketplace. And that's why we started Think Realty. Super excited for our guest today. We're going to branch into business and real estate and all things investing. But before I do that, I want to say a quick thank you to our podcast sponsor, which is Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. Our guest today is Chihiro, and Chihiro is with ZT Corporate. Thank you so much for being on the show today.
Yeah, appreciate the opportunity to chat with you, Eddie.
Flew all the way in from California to be a part of the
Dallas.
show. Oh, Dallas, okay.
Yeah.
For some reason I was thinking you were coming in from California. And got delayed, but made it just in time for the podcast. So,
yes, sir.
Yeah, glad you're on the show. If you don't mind, just kind of back up and tell the story. How did all this begin? How did you create it? And then kind of give us an overview of the company.
Yeah, our founder, Chihiro Kurokawa, back in the late 90s, he founded ZT Corporate as had a different name then, but we were a financial advisor, just trading stocks and bonds. And then the dot-com crash happened in the early 2000s. Bunch of wealth of his and his clients was wiped out, and he's like, well, this kind of sucks. It's a macro event, had no control over this. So that was the catalyst for us to get into operating businesses. So we got our feet wet as an LP in a deal, and then moved forward as a general partner and built a healthcare facility that was 3 businesses in one. It was a surgery center, imaging facility, and a sleep clinic all in one. So we had 3 complementary businesses, can make revenue at night and day. And that was successful. We replicated that and then started diversifying in a variety of different healthcare businesses. Yeah. And then eventually added a second, or 2 more verticals. One is car dealerships. That's about 11 years we've been in that business. And then also, we started building and doing gut rehabs on healthcare facilities, car dealerships. So naturally, we do real estate as well.
Yeah. And you said you've also done some hotels.
Yes, that was most recently, late last year, we closed a portfolio of 4 limited service hotels. So think like a business hotel. Yeah. Courtyard by Marriott, those types.
Yeah, very good. That's awesome. So how did you get involved with this company, and what's your story?
Yeah, so I was like a corporate guy, right? Doing analytics at a giant, like, publicly traded company. And a year in, I was like, this isn't exciting anymore. And so I started burning the candle at both ends, and while working full-time, I built up a multifamily syndication business. So I had like comprehensive deal experience, finding deals, raising capital, all of that, right? A to Z. And then multifamily got crowded, right? So I started looking, hey, maybe I'll get into some different kind of asset class, and fortune would have it that I ended up at ZT Corporate.
Very good. And so what's your primary role at ZT today?
I would say 75% is capital formation, so working with investors, and then 25% strategy, marketing, legal, those types of things.
Yeah. Do you find that that there are real estate deals? I think about multifamily. It's almost the best of both worlds. It's almost the best of PE and real estate. It's like where it's a business and its value is based on its NOI, net operating income. And so depending on how well you operate that business, essentially it's a PE deal, right? Like you're now earning a multiple based on cap rates.
The big difference though is in real estate, you don't have cap rate compression based on the size of your portfolio, whereas in business, right, you get a better multiple the greater the EBITDA.
Bigger the EBITDA, yeah.
Right.
Yeah, that's a great point. So with what you guys are doing at ZT, what are the types of deals you're looking for? Like what's your buy box today? What are you looking for?
Yeah, so we primarily focus on those 2 verticals, right? So on the healthcare side, we're specifically focused on something called freestanding emergency rooms, which incidentally doesn't exist in most states, but it does exist here in Arizona. In any case, our typical seller is going to be a first-generation group of physicians who became entrepreneurial and opened up this business. But they're not at like enterprise level, so we can add value by doing basic blocking and tackling. Like unify the software systems across 31 facilities as opposed to 1 or 3.
Right.
So basic things like that, supply chain management, right? And then we have expertise. We've been doing this for 12 years, so we have resources that aren't generally available to that first-time entrepreneur. They've done well. They're getting a good exit from us, but then we can get a better multiple by just taking it to a next level of scale.
Is there two components of this? Do you have kind of the acquisition and the operations side of ZT, and then do you have a corporate fund or like a fundraising structure? Do you have some sort of a fund that is attached to this?
So we are unique in two respects. One is that we operate like we roll up our sleeves. We're operating all of our portfolio companies directly. Number two touches on that, which is we raise almost all of our capital through high net worth and ultra high net worth investors.
Okay.
So we don't take institutional capital.
Sure.
Yeah.
So you don't take the retail capital necessarily, and you're not really, I mean, to some degree you are, but like you're not taking the lower level retail capital, and you're not taking big institutional capital.
Yeah.
So
that's a good way to put
essentially
it.
What you're taking is capital that is fairly passive, but has a little bit larger amounts.
Mm-hmm. Yep.
Yeah.
Exactly.
Very good. That's awesome. And so why not get deeper into hospitality? So are you just kind of putting your toes in the water on this small portfolio and seeing how it goes?
So this was really unique, right? So we were able to acquire 4 hotels that were cash flowing strongly enough, and we were buying well enough that they were at a 12.2 cap. So the thesis there was, let's find assets that we can buy without any debt.
Yeah.
We have zero default risk that way. And then on our time when we want, we can put debt on and get cash out of these things. And so we believed and still believe there's a really limited window to do that. And so that's why this has been kind of a one-off a deal that we did. That was $47 million that we deployed to buy those 4 assets. But right now, we haven't had traction on finding similar assets.
I'm sure they're out there, but probably few and far between. But I do like that strategy, because essentially what happens is you can watch the operational efficiency of these assets, then determine how much debt you could put or you should burden it with, instead of believing that there's room between the debt burden and the opportunity, and then taking that risk. Yeah, it's really
exactly
good.
Right.
So where are you focused? Let's go back for a second. So in focusing on the future, what are some of the kind of predictors or the economic kind of situations that you're watching for or looking for? Are there any other things like that you're exploring? Like you went from doing a lot of healthcare to branching into hospitality. Is there any other market conditions that'll cause you to branch out, or are you watching for?
Yeah, so one of the characteristics about us is that we directly operate, right? And so that everything is trade-offs. There's no solutions, right? So the trade-off there is we're very deep and narrow in 2 asset classes. We operate, and we know these businesses inside and out. But then, in contrast to many or most corporate PE firms, then that means we can't just jump into SaaS platforms or some other industry, because we don't have the leadership infrastructure to take that on. So we are very focused on growing within our particular niches right now, which is freestanding ERs and auto dealerships.
It's interesting. What made you branch into auto dealerships?
Funny story there. So our team used to have a pretty strong field component where we had upwards of 30 to 40 cars in our fleet. And we would refer our clients to a particular dealership in the Houston area. We were very close with the principal. And so, and maybe I'll just say it was A-Rod, actually. He owned a dealership southeast of Houston. And so our founder, Chihiro, became friends with A-Rod, sent him tons of business, and then we got tight with the GM as well. GM says, hey, you should get into this business. There's some really unique characteristics about the dealership business that I think would be appealing to you. And we're like, no, man, we're going to stay in our lane. But credit to him, he was persistent. So we did our due diligence and we liked it. So it was 11 years ago we got into the business.
That's great. We have that in common. We actually are in the middle of doing a business deal with A-Rod. He
No
speaks,
way.
Yeah, he speaks at a lot of our conferences.
Oh, wow.
But yeah,
Okay.
He's a great guy.
A real estate deal or?
So no, this one's actually something I can't share yet,
Okay.
but it's not real estate related at all.
Okay.
Yeah, he's a great guy.
Got it. Very
Yeah,
cool.
Very cool. Yeah, he lives in between Miami and New York, and we had him speak at a couple of our big conferences that we've had, and just got to know him. And he's a consummate deal guy. Like, he just wants to be in as many deals as possible.
Yeah.
But he's a huge real estate guy, though. I mean, the amount of real
absolutely.
estate he's done is amazing. But that's great. With all of your healthcare facilities, are you buying the real estate as well? Are you holding all of those assets?
Great question. We typically that first generation entrepreneur owns the real estate. So the answer is yes, we buy it, but we also typically spin it off in a sale leaseback transaction because we can find a better use for that capital by investing into the business, by buying a new CT machine or whatever, as opposed to leaving it tied up in the real estate. So we get a better yield by investing that capital in the business.
And so you're trying to maximize your yield, not necessarily your long-term appreciation.
Our biggest focus is on the eventual multiple, the exit. Yeah.
So you're maximizing the potential exit.
Yeah, that is what we are geared towards.
And is the goal to aggregate these things and sell to a bigger PE firm or a larger group?
Absolutely.
Okay.
Yes. Yeah. The roll-up strategy. That's what we're doing.
That's great. There's a lot of people that are playing in that space finally today. Like, I've played in the PE space for a long time, and it's funny because you really have, small cap, mid cap, large cap, and it's like there's lots of large cap stuff that's available. There's $2 trillion in liquidity right now in the PE space, primarily in large cap. But there's really no one to aggregate a lot of the smaller things to get it to a place where they can feed on it. And it's like, so
exactly.
The saying is always that it's really hard for a whale to get full on minnows. And so at some point, somebody has to aggregate these things. And I definitely can see where that will certainly play out well in your favor.
So where we play in the so-called lower middle market is we buy, think of it as like a highly successful family-owned and or family-operated business.
Sure. Maybe
generating 35 million in earnings. Like, that's a phenomenal business, but they're
business,
not enterprise scale, right?
Yeah.
And so that's kind of the area where we play.
Yeah. And really the large cap stuff, they want it to 100, 110 million is kind of their threshold, But yeah, that makes sense. Well, that's awesome. Well, how can people kind of follow the success of ZT Corporate, or how can they get in touch with you if they feel like there's something?
Yeah, so I am not hard to find. The hardest thing about finding me is spelling my name right.
Yeah.
But my name is Chihiro Kurokawa, and I'm on LinkedIn, Facebook, Instagram.
Yeah.
My handle on Instagram is CG Kurokawa. That's Kurokawa.
That's great. Very good. Well, I appreciate you being on the show today.
Eddie, I really appreciate you.
Yeah, thank you. Yep. Thank you, Think Realty, for being a part of the podcast today. Always appreciate you being a part, always commenting, sharing, and being a part of our world. I want to say a quick thank you again to our podcast sponsor, which is Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you maximize the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com, realpropertymgt.com, and make sure that you have on your calendar on August 13th, the Think Realty Virtual Summit. Last year we did a virtual summit, and it was one of the best events that we put on all year long, and I know that you're going to appreciate it as well. Lots of commentary from people that are doing single family, multifamily, a lot of alternative asset classes like self-storage and mobile home parks and commercial real estate, and also we'll have a lot of commentary on financing and structuring these deals. So make sure that you're a part of that, and you sign up at thinkrealty.com/virtual. Get your tickets now, and we look forward to seeing you in August. So we will see you then. Thanks so much for being a part of the podcast. It's always our privilege. Make sure that you stop by your local Barnes & Noble, pick up the Think Realty magazine, or subscribe at thinkrealty.com and get the magazine to your doorstep.